Can you see it?
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir. Yes, sir.
Okay. Okay. Very good morning to you all. Um, Today we are going to uh, have a brief discussion, a brief lecture on commodity supercycle, which is very much the phenomena that we are facing right now. Yeah. The debate is whether or not we're now entering the commodity supercycle. Yeah, because some say this is not enough to be said as the super cycle. But if we see the trend, it is not important if it is categorized as commodity super cycle or not, because now if we're seeing the price of the commodity is raising over time. Um, the question is whether we can actually um, face this cyclical trend or not. So it's not about the category, but whether or not we can cope with it. So yeah, this is the outline for the course, uh, a brief definition, and also what is causing it. And we're also going to see what is the effect on the Indonesian economy and what's in it for Indonesia. Can we utilize this super cycle or the early trend of the commodity super cycle, or maybe another perspective is how to face the negative effect of the commodity super cycle. So yeah, we need to be careful on how to mitigate the adverse effect of the super cycle itself. So if we see it through history, yeah, there are four dominant commodities, yeah, with, within this super cycle: oil, livestock, metals, and also agricultural products. Although it is quite dominant, but it's not that this is not affecting another variables. It's not affecting also another what do you say, commodities, because if you see it through time, it's not always these four commodities. Yeah, sometimes we have another commodities that is actually coming into play. But alas, all of this is actually creating the macroeconomic trend of commodity supercycle. So the price of the commodities, yeah, the commodity supercycle, we call it supercycle because it's quite volatile by nature. Yeah, if you take a previous Singer hypothesis, yeah, which is saying that if you if you actually focusing on commodities as your exported goods, um, you will be facing a high volatility in the future. And with the high volatility, if you see the trend is actually quite downward. So, needless to say, that if you base your economy on commodities, your economy will be quite fragile. Why? Because the commodity itself, by nature, will lose its value. Yeah. So we have a downward long run trend on this commodity. Um, but again, yeah, we need also to be careful on what is actually going between those period, yeah, or within those cycles. We have the period of upswings as well as downswings. It is quite dramatic. That is why we call it the commodity super cycle. Um, there are some of the reasons or the what do you say, primary cause of the commodity super cycle. We have overproduction. Yeah, overproduction creates oversupply. Yeah, with that oversupply, yeah, will create um, a massive decline in prices. Yeah, because the supply exceeds the demand. To the other perspective, on the other hand, if we see it from the demand side, yeah, we can also have, for example, a demand acceleration. Yeah. So when the demand accelerates more than the supply, this will also cause another cycle. Yeah. So um, when the demand exceeds the price, exceeds the supply, I mean, so this will actually um, uh, raising the price eventually. So we have the shock coming from the supply side as well as the demand side. Overproduction creates supply, what do you say, exceeds in supply. Yeah, overproduction, you create a surplus of production. Yeah, then the global price will be declining. War and shortages is also having the same effect, although it's actually quite inverse. If overproduction creates a declining in prices, war and shortages coming also from the supply side will increase the price, yeah, because you have a supply contraction because of the um, adverse shock, yeah, from other variables. Um, yeah, this will be coming from the supply side as well as the demand side, as I told you before. But why we call it a cycle? Because actually we're seeing a more or a larger pattern, a longer pattern appears in the price movements of the commodities. We are seeing it in the multi-decade periods, yeah, of the declining and also increasing in prices. So that's why we call it the super cycle. Okay. So uh, so if you see it, it's just like a cycle, sinusoidal curve. Yeah. So uh, the cycle can be downward or upward. Yeah. As long as it is actually above or below the trend. Yeah. The long run trend. So we can actually see it as a cycle. And also, if you can see it from here, yeah, um, these variables or these very sectors, livestock, agricultural products, oil and base metals, they have a, a more or less unilateral progression. Yeah, they are actually individually volatile, but all of the commodities have the tendency to be synchronized in the future. In the future, and this also will bring also other commodities to tag along within the overall period and creating a much more of a macro trend. So we have a period of upswings as well as a period of downswings. Although this is the dominant sectors, the dominant um, commodities, but this will also bring along other commodities to follow suit. Yeah, and basically, or initially, the initial condition, um, most of the time, the trend is quite unilateral. But if it is long enough, yeah, this will actually have a tendency to synchronize or to have a convergence over the time. So that is why we call it the commodity super cycle, because not only one commodity but several commodities or several dominant commodities that creates this pattern, yeah, the cycle pattern, the cyclical pattern. Um, we have been there before. Yeah, if you see it from here, yeah, we have the first super cycle, the second super cycle, the third super cycle, and more or less the fourth super cycle. Yeah. Um, so we see it from the upward and downward trend. For example, here we are not uh, actually seeing it from also from only the upward trend. Yeah. Okay, we have the upward trend as well as the downward trend. So we sum it to get all together. So it is actually 33 years of super cycle, the first super cycle. And as I told you before, this super cycle is always initiated with a dramatic shock, disruption, or progression in every timeline. For example, here under the first super cycle, if you remember what happened here, this is the era of the first and the second industrial revolution. Yeah. Actually, we have another period of super cycle, but um, as the data availability, so we can only have it from the early 1900s. Okay, so before early 1900, it's actually very difficult to gather the data. Yeah, maybe we had sometimes or some period ago, some centuries ago, of this cycling commodity. Yeah, maybe if you remember in your Bible or in your Quran, um, mentioning uh, the time of the uh, Yusuf, yeah, as a prophet, as the economist in the Egyptian early time, yeah, he actually um, had a forecast of 14 years, yeah, 7 years in wealth and 7 years in shortage. Okay, so of 14 years forecast. Maybe there is more like the early super cycle that we humankind had ever experienced before. Yeah, so but we cannot actually note that the period before 1900 because it's again is quite difficult. If you remember the Keynesian conjectures, yeah, in the early 1900, when he said, when he argued about the interaction about the variables, yeah, consumption, government expenditure, and so on and so forth, that actually constitutes the GDP, the output, yeah, and the dynamics in the supply and also the demand. Um, we call it as the conjectures, the Keynesian conjectures, because it is actually it's not driven by the data. It's more on hypothetical, let's say, hypothetical methods by nature, because the data is not readily available, was not readily available at that time. Um, Not until Kuznets in um, the period of 1940s or 1950s, yeah, he created the so-called Kuznets curve, yeah, Kuznets curve, and he also actually proved the Keynesian conjectures using uh, historical uh, historical data, yeah, ranging from the period of 1800, the late 1800, yeah. So because of the data gathering, yeah, which is actually involving a quite enormous effort at that time, Kuznets um, had his Nobel Prize. Yeah, that's actually one of the, what I say, one of the what I say, example, one of the uh, um, story, yeah, of data gathering that gives you a Nobel Prize, which is actually very hard at that time. But nowadays it's quite easy. And that also explain why, yeah, we had only the period of the first super cycle coming after the first and the second industrial revolution, not before, because before the era is actually quite difficult to gather the data. Yeah, so if you go gather the data at that time, it will be another Kuznets that had a Nobel Prize. Yeah, so it's actually quite difficult. But again, yeah, if you see the data over here, you have the upswings and also downswings altogether 33 years, yeah, coming from the first and the second industrial revolution that created a massive disruption at that time and created a cycle. Just like when you have a, what I say, earthquake, yeah, in one center or several center of the earth, that creates tsunami, yeah. So it's just like that, yeah. If the earthquake is happening in the ocean, so it will create a massive wave, yeah, will create tsunami. It's just like disruptions. When you have disruptions, you'll be creating a cycle because it's actually abnormal shock, abnormal aggression within the cycle of the economy. So it is actually quite understandable when this phenomena created a cycle, yeah, tsunami or a super cycle. And the first cycle here happening in the period of 1900 to 1932. Yeah. If you see the declining period of this second part of the wave, this is actually the period of the Great Depression. This is when Keynesian conjectures came into place. Okay. So after the period of uh, increasing in prices because of the disruptions on technology, yeah, here gradually this will be declining, and um, most of the time another shock that is actually happening within the period of super cycle will actually accelerate the cycle even more. And in this time there was a shock also in the financial sector that creates a major price decline over here. Yeah, uh, the super cycle. Yeah, and it, it turned out to be in at this time the financial contraction. Yeah, that happened in within this time, going hand in hand with the commodity cycle, which is actually downward sloping, yeah, at that time. And we'll see throughout the time this not always be the case. Okay. So another shock coming, yeah, the second super cycle, yeah, down, upward and downward. Another shock in the early 1970s, yeah, upward and downward. This is the period of um, the third industrial revolution. Yeah, if I'm not mistaken, this is the period of the third industrial revolution when we found computer and supercomputers in this time, and also a massive leap in technology. And we had also the uh, war, yeah, on commodities. Yeah, at that time, in Iraq and also Iran, if I'm not mistaken, this is Iranian war. Yeah, this is the period of Iranian war that actually creating a massive price increase because of shortages, yeah, in supply of commodities at the time, and um another declining period, yeah, of almost 30 years. And we had also the what do you say, the last, yeah, before we enter a new commodity super cycle, we had the fourth commodity super cycle, yeah, that was happening right after the financial crisis. Okay, the global financial crisis happening within this period. And as you can see here, um, this is the period of the global financial crisis, but the financial contraction is going was having an inverse relation with the commodity prices. Yeah, when we had the financial contraction, so the money were flowing to commodities that actually pushing the commodities prices even more. Okay, so yeah, so we had um, ambiguous relation between the financial sector and also um, the financial sector and also the commodities. Okay, and which is actually the real sector. Quite ambiguous. Yeah. So if we compare it with the early period of the financial crisis, yeah, the era of Great Depression and a global financial crisis is actually quite vague. Whether or not it's actually going hand in hand or it's going onto an inverse relation. But then again, yeah, what we can actually um, agree is when you have disruptions, yeah, whether it's financial regression or maybe supply side contraction and so on and so forth. This will always create the cycle. So, uh, as a summary here, the commodity prices go through extended periods during which prices are well above or well below the long-term price trend. Yeah, so if we have the long-term trend, yeah, um, if the short-term trend is well below or well above the long-term trend, so we can call it a cycle. There are two types, of course, as I said before, upswings and also downswings. Many economists believe that upswing phase in supercycles results from a lag between unexpected, yeah, so it's unprecedented, unexpected shocks, persistent and positive trends to support commodity demand with slow-moving supply. So this is basically a supply and demand gap, yeah. It can be from happening from the supply side, yeah, overproduction or maybe a dramatic contraction, or maybe from the demand side, yeah, accelerating demand while the supply side uh, took time, yeah, to adjust, and it's always taking time because by nature, if you see it from the supply side, you have the input stickiness, the production input stickiness, yeah, that is causing the slow moving supply side. What is actually the input stickiness? The input stickiness itself is coming, if you see, if you understand the production function, we have two factors of production as we had before in the Cobb-Douglas production function, and also from the other let's say equation, yeah, that constitute the output growth. Yeah, basically we have two factors of production, labor and also capital. um, in a bad time sometimes, amidst the pandemic, for example, uh, you had your labor laid off, and also you had your machineries actually freezed within the shock period. But when you are trying to revive the output, the production capacity, you need time because it's actually always taking time to hire new labor, yeah, to and then to restart the machineries, and this will create the lag because the demand side is always more progressive than the supply side, yeah, and this will always create a phenomenon that is called overshooting. Yeah, the demand side will actually uh, grow rapidly, but the supply side is quite sticky. So eventually, as adequate supply becomes available, yeah, in the future, yeah, um, and the demand growth slows, yeah, because as I mentioned before, sometimes it is causing um, overshooting, yeah, an overshooting. Overshooting means that it is actually above the long run equilibrium. And slowly but sure, the demand will be actually stabilized in the future. Yeah. The demand growth slowing. Yeah. And the supply is accelerating to match the demand side. And the cycle will enter another swing, which is actually a downward swing. So, and most of the time, this will end actually the cycle. So, what causes the commodity cycles in the past? As I said before, several phenomena. Yeah, we had a rapid industrial revolution. Yeah, growth of a nation and region. Yeah, most of the time this will be the main drivers of the commodity super cycles. Uh, as I mentioned before, the rapid growth of the U.S. In the period of after World War II, and also the ascent of China at the early of 21st century, this brings along an historical pattern of growth and cycle. What about today? Yeah, are we actually entering this another period of super cycle? Because um, um, the latest period of super cycle, which was actually ending in the period of 2015 or 2016, yeah, it's not that what do you say time if you see it from the time proximity, it's not that long. Yeah, so the gap between the fourth super cycle and the ongoing in the much more debate ongoing super cycle as we speak today is quite minimum. So is it actually another super cycle? The debate is actually quite deep. If you see it from the uh, data, the chat, yeah, the articles, the number of articles, the mentioning the commodity super cycle is quite declining, but the debate is still here. Yeah, we are still debating whether or not we are actually entering this commodity super cycle because we have the price um, increased, yeah, everywhere. Yeah, and this creates concerns, especially coming from um, the big boys, China, the US, most of the European Unions, Japan, and also India. India, they had also uh, um, the shortages, yeah, the price increase in the input of production. So the debate is still here. Um, so what about Indonesia? Of this is not very surprising actually. So if you um, this is okay, this is unprecedented, of course. If coming from the shock itself is unprecedented. The pandemic is unprecedented. Yeah, uh, we didn't know uh, when it is coming. Yeah, and we had in 2009 and 2020 the pandemic is actually beyond our everyone's forecast. But after the pandemic, it's actually quite actually it's not a rocket science. When you have this kind of disruptions, it's not that surprising that you will be facing another what do you say? If it is not super cycle, you will be facing a cycle. Yeah. If it is not tsunami, maybe a shock wave, or maybe something that is actually more representing on the adverse effect of the pandemic. What I told the Minister of Trade in 2020, yeah, the fiscal stimulus coming from the big boys, U.S., China, European Union, Japan, yeah, the U.S. itself is more than 10% of the GDP. Yeah, this fiscal stimulus, which is actually quite enormous. Yeah, the U.S. is it's just like a giant. Yeah, if they bring the fiscal stimulus, it could be enormous, not only for the U.S. but also for the overall global economy. Um, we had also the fiscal stimulus and it's still ongoing stimulus from the Japanese and also the European Unions and also and also China. This will push, yeah, the demand side. Um, the pandemic itself is actually creating a massive contraction in the supply side. Okay, but the fiscal stimulus is helping to accelerate the demand side. Of course, it's also helping the supply side, but as I mentioned before, the supply side is quite lagging behind if you compare it with the progression from the demand side. With this in mind, yeah, with the accelerative nature of the demand side, yeah, this will push the demand side even more, while the supply side is quite sticky by nature, as I told you before, because it takes time to hire new labor, it takes time to restart the industry, the machineries, and so on and so forth. So this will create a disproportional growth between the supply and the demand. It's not that surprising that we had this gap within this 2021, because in 2020 I was actually a bit had my concerns at that time, and I told the minister that we will face this phenomena because it's not a rocket science, I believe. Yeah, you have the supply and the demand gap, and this will create the what do you say, the shock in commodities. If you see the trend, it's quite progressive over time. Uh, During the recovery from the big boys, this will stir up the demand side even more. Yeah, you have the China progressing without having any recession at all. Yeah, you have also now the US is also progressing even more with the fiscal stimulus and the monetary expansion. And domestically speaking, the US is also facing um, um, high inflation growth, yeah, which is actually one of the highest since maybe 30 years, yeah. And we have also another big countries also pushing the demand side even more, and this creates this phenomena of the rising in commodities and also energy sectors. But I believe this is quite transitory by nature. The U.S. itself, Yellen and also Jerome Powell, um, although they have their concerns on the quite steady inflation rate, yeah, quite rising inflation rate in the U.S., but I think they're seeing it as a transitory moment, not runway um, phenomena of inflation. Yeah, a runway inflation will be quite disastrous, but as if today, um, the inflation is quite transitory because it's actually just a disproportional growth between the supply and demand. Whether or not this will create a super cycle, so it is actually always an open question. Question. Yeah. Um, for Indonesia, um, if you ask how this global phenomena affecting the Indonesian economy, I must say that if you see it from the commodity side, this is not quite significant. This is not shock influencer. This is not a dominant shock for the Indonesian economy. What is actually quite dominant today is here, yeah, coming from COVID. Yeah, this is the COVID-19. Yeah, 17 to 18% of the shock of the variance in the GDP is coming from the COVID. That is why the government now is trying at all costs to reduce the infection rate. Because if the infection rate is increasing, yeah, coming from the impulse response function simulation, this will create a contraction in the GDP, yeah, 0.6 to 0.8%, yeah, of contraction in the GDP if the infection rate is quite increasing over time. Yeah. As of today, we have a more or less controlled infection rate, which is actually um, quite a good news for the Indonesian economy. Yeah. So um, if you compare between the is it pandemic versus the economic condition, is it a trade-off? Yeah, some actually comparing between these two. Yeah, so if you tackle the pandemic, yeah, as a consequence, your economic condition will be much worse, and the other way around. But actually, this is not a simultaneous task. This is more of a sequential strategy. So you tackle the pandemic, then the economy can progress. Because if you see from the data, okay, so if the infection rate is progressing, the economy will be decreasing. So quite sequential and quite a clear cut. So nowadays the government is trying at all costs to reduce the infection rate. Coming back again to the global phenomenon of the much more or less the early trend of the commodity super cycle. So from the early trend, so if we can call it the early trend of the commodity super cycle, how this will affect our economy? Um, if you see it from the coal price, it's only 0.6%. That create the variance in the GDP. Yeah, the shock is quite minimum, 0.6%, as opposed to 17.8% to 18%. Yeah, coming from COVID. So it's not that dominant. Another other commodity, maybe the oil prices. How about the increasing rate of the oil prices? It's only 7.8%. Yeah, that creating the variance in the GDP. So having this in mind, that this commodity price surge that happened globally is not that significant in creating a major havoc in the Indonesian economy. But if we cannot manage it and control the stable, what do you say, condition in the short run, so maybe in the midterm we'll be also facing um, a price surge and also in commodity prices. Then this will also affect the economy. Nowadays, it's not that troublesome. Yeah, the condition of the Indonesian economy in terms of the commodity is quite positive, in terms that we are now in the condition of the oversupply in the commodity goods and commodity sectors. Yeah, so uh, this will actually be positive for Indonesian economy because we are not facing the global phenomenon yet. But if um, we push the commodities, we push the exported goods, yeah, in the commodities aggressively in the short run, this might affect our economy in the midterm and the long term. As you can see from here, yeah, uh, this is what happened when we export the commodity. When we export the commodity, of course, this will bring a positive effect to our GDP. Yeah, if you increase your export, of course, your GDP will be also increasing. Although it is quite minimum. Yeah, it's positive, but it's not that great. Yeah, coming from the export. But the adverse midterm and the long-term is quite devastating. As you can see from here, yeah, if we continue this aggressive export in commodity in the third, fourth, and the fifth quarter until the eighth quarter, yeah, which is quite prolonged contraction, yeah. If you see from here, it is actually a massive contraction to our economy. It's about 0.2 to 0.4% of contraction to the economy coming from the export side. Why? Because when we export the commodity aggressively, yeah, this will actually minimize the gap between the supply and the demand side domestically. When, which I said before, that our current condition, the Indonesian economy is quite oversupply, overproduction in terms of the commodity, yeah, because the demand side is not that progressive. Domestic demand side is not that progressive. But if we export this progressively, yeah, to the international market, the gap will be minimized over time. With that, yeah, the economy itself will be facing the imported inflation coming from the international prices. Because of the international prices is hampering our domestic economy, the input of the production will be very much affected. If you have a cost push inflation like this, yeah, this will very much contract your supply side. Yeah. And with this happening in the economy, yeah, if you remember the supply and the demand dynamic, from this, if the supply side is going leftward, the output will be also going left, which is actually we are actually having a contraction in the output. Okay, so this will be burdensome if we are not careful. Yeah. Okay, we can actually have some positive um, attributes in the short run. We can have the wealth effect in the short run, but not in the midterm and the long run. Yeah. And needless to say that this phenomena happened before. Yeah. After the period of the global financial crisis in the 2008, we had also the fourth super cycle coming from the earlier slide. Yeah, the fourth super cycle that created a massive progression in the commodity prices, and then we aggressively, yeah, push or export into this commodity, and we forgot to invest in the industry. We forgot to invest in the value, yeah, of the export. Alas, after 2011, yeah, after a period of upswings, yeah, we had the period of downswings that is actually um, um, what do you say, have a negative effect on the industry, yeah, have a negative impact on the trade balance, yeah, because we were dependent heavily on the commodity price surge, yeah. When the commodity price surge end, yeah, and entering a downward period, yeah, so this actually um, put much strain in our trade balance, yeah. And all in all, this actually quite negative to our exchange rate. So if you remember from the period of 2011 to the period of 2014, early 2014 or 2013, we had a persistent depreciation of the exchange rate coming from the trade balance, coming from the trade deficit. Why we had this trade deficit? Because the export performance is quite lagging. Why is it quite lagging? Because it's heavily dependent on commodities. So it's quite myopic by nature. Yeah. In the policy making, so we push the export, but we forgot to invest in the infrastructure. We forgot to invest in the industry. We forgot to invest in the labor productivity and so on and so forth. So we had this export lagging. How can this be relevant? Yeah, the export lagging is coming from the industrial lagging. Okay, because we had a very myopic policy. Yeah, when we push the export, we forgot to invest in the industry. As I told you before in the early part of the lecture, just before the midterm, I told you that if we push the industry itself will create a surplus of production. With the surplus of production, then we can export. Okay, so without the surplus of production, we cannot push or export. Yes, of course, we can push export through commodities, but it's quite transitory by nature. So it's not having what do you say, a long run effect. If you see it also from the industrial capacity, yeah, uh, this is coming from the paper, yeah, of premature deindustrialization, Roderick in 2017. Oh, sorry, 2016. Yeah, um, Roderick had a threshold. Yeah, have a certain threshold in 1990s, pre-1990s, and also post-1990s. So if you actually, if your economy goes beyond this threshold, so you will be categorized as an industrialized nation. Yeah, more than 27% or more than 24%. Okay, this is only true for the developing countries nowadays, because if you see the trend on the developed nations, is quite having a deindustrialization phenomena by nature. But what is actually um, um, what differentiate the phenomena that happen in the developed nations versus in developing countries? Developed nations had their days before. So coming from the structural transformation theory, yeah, Hollis Chandri Sirkwin, yeah, the structural transformation, you're actually progressing from agricultural um, to industrial and then services. So by stages, okay. So this developed nation, most of the developed nations, why we categorize them as the developed nations, yeah, because they already experienced the industrialization before, yeah, more than 27%, more than 24%, okay, and now they're entering the stage, the more advanced stage, which is actually the service, yeah, dependency. But this is quite natural. When they're having heavy dependency now in services, it's quite natural that the industrial contribution is declining. So they are also experiencing in deindustrialization, but quite a natural deindustrialization. What happened with most of developing countries, yeah, in this case Indonesia, so we have this deindustrialization, yeah, before time. It's quite premature. Okay, so before we progress to the category as an industrialized nature, yeah, industrialized country, we have a period of declining contribution. So in the early of 2000, if I'm not mistaken, the contribution of the manufacturing sector to the GDP is about 29%. Nowadays, it's about 18, 19, 19 or 20%. Okay, so it's quite premature, quite premature. And this research is actually just to moderate, yeah, what I've done before with my colleague here. We moderate the threshold, yeah, for the Indonesian case. If Roderick have 27% and 24%, okay, we have a more moderating figure of the threshold, 18%. Yeah, coming from several calculation, we had this threshold, 18%. So if it is more than 18%, so you will be, so you are categorized as industrialized. So it's quite moderate by nature, although it's actually below the world average, but maybe for the Indonesian case, um, it's actually quite understandable. Even from this moderate figure, yeah, if you see it from most of the sectors, it's less than 18%. So we have this deindustrialization all over the places. Oh, what about this one? Yeah, non-metal mining products. Uh, this is mining products, yeah, commodities. Yeah, before we have 89%. Now we have 25%. Uh, in 2005 and 2010 is about 12 or 13%. Okay, is it actually good? Now, if you see it from here, this sector over here is the one that we are talking about right now, the commodity, right? The commodity coming from the mining, the extraction industries. Okay, so it's not that what do you say? It's not that good if we have a very high percentage on this industry over here. If you see it from the time frame, from the timeline, yeah, this is the period of, yeah, maybe this is the period of investing on a more value-added industries, to the other sector, non-extractive industries. But if you see it from this time, this period, this is actually happening after the great financial crisis, the global financial crisis in 2008. So this is when we utilize the commodity super cycle at that time. Yeah. So it's quite myopic by nature because we left this behind. Yeah, which is quite positive, but nowadays it's quite progressive. So if you see the CPOs, if you see the extraction industries, if you see the woods nowadays is also increasing. This is also commodities. Yeah. Uh, so it's not that good, yeah, for the economy, as uh, uh, my simulation suggests earlier. So with that said, yeah, actually, this is quite an alarming situation for the Indonesian economy. Yeah, of course, we can still utilize the commodity price surge, but it's only transitory. We cannot actually rely on the commodity prices in the midterm and the long run. Yeah, in very short run, you can have a positive effect to the economy, just like um, the figure suggests earlier. Yeah, maybe in the second quarter or the third quarter, maximum until the third quarter of the year. But afterward, yeah, it's actually gaining. It will be gaining a massive contraction to the economy. So with that said, so we need actually to be careful. Yeah, of course, this is actually creates will be creating incentives for the exporter, especially from the commodity exporter, because the price surge is quite heavy. And if you want what I say, short run profit, this is actually the time. But of course, in the light of the um, I say, future projection, yeah. So we need to also to be careful, as Prophet Yusuf suggests. Okay, this is the period of your wealth, yeah, but you need to be careful because the period of contraction just actually um, uh, say not that very far away. Yeah, so you need to be careful how to utilize this condition without hampering future conditions. Okay, I think that is actually very much a conclusion for today's brief lecture. Yeah, you can dig more on what I say, what I said earlier about exchange rate, trade balance, and the industrialization. Yeah, within this chapter. Yeah, that I published in 2017. Okay, thank you very much for your attention. If you have any questions or follow up, please do so. Please.
Hello, sir. Can you hear me?
Okay, is that clear enough? If you have don't you don't if you don't have any follow-up questions, so please submit your group names with also the topics. Yeah, maybe you can send it through WhatsApp group, and also you put it in the thread, yeah, within the Microsoft Teams, so that we can have a documentation of the group names and also the topics. So next week, yeah, I will randomly pick the group, and with that, you need to be ready. Yeah, all of you need to be ready. So it's to be fair for all of you. So you prepare the materials within this week. Yeah, and afterwards I will be picking you randomly. Okay, is that clear?
Yes, sir.
Okay.
Yes, sir.
Okay, thank you very much for today. Um, See you next week.